I'm going to be breaking down the exact ICT entry model that no one is talking about, but is one of the most consistent and effective models that I've used when trading. In this video, I'm not only going to tell you this exact high win rate entry model, but give you a step-by-step strategy with trading plan to capitalize in the live markets today. But before we get into the video, make sure you guys are following me on Instagram at Arkhamtrades. Thank you. The model we're going to be talking about is the Blowoff signature. And yes, this is an actual entry model ICT has referenced once inside of his 2023 mentorship. This is a model that I talked about months ago and have shared on my Instagram. And as of late, some trading influencers have taken this model and named it other things, putting their own spin on it with no credit to ICT himself. And that's here to end, because right here on this channel, I'm going to be giving away this model for completely free. So smash that like button and share this video if you haven't already. So the Blowoff signature is a reversal model. This is a candlestick pattern where we get that initial push to the upside, followed by a accumulation candlestick, then a strong displacement candlestick covering the initial push higher. When that displacement candlestick closes right here, we can immediately take our trade idea on the next candlestick opening, anticipating a continuation to the downside. Stop loss back above the displacement candlestick high, targeting opposing liquidity below. And you can say the vice versa for a bullish stance. We had that initial push lower, followed by this accumulation candlestick. Then we had this strong displacement candlestick higher. This is that Blowoff signature, so on the next candlestick opening, we can take our longs, targeting opposing liquidity, which is higher prices. But before we can start looking at the patterns in the live market, we have to be aware of overall narrative and how to anticipate this formation to happen. This gets us into our first lesson, which is time. You want to be trading this model during either London session between 2 to 5 a.m. EST, New York session between 7 to 11 a.m. EST, or London close between 11 a.m. to 2 p.m. EST. And the three time frames we want to be focusing on is the 4 hour, the 1 hour, and the 15 minutes. And on the 4 hour and 1 hour time frames, we want to be identifying PD arrays and liquidity inside the marketplace on the higher time frames as areas where price can see a strong possible reversal. The PD arrays I want to be focusing on is fair value gaps, old highs and lows, as well as order blocks, as these are reversal levels where the marketplace could see a strong rejection. Then coming down to the 15-minute time frame, we can start to look for nested PD arrays, which is essentially 15-minute PD arrays inside of those higher time frame PD arrays, as well as this is the time frame that we want to be looking for the Blowoff signature as price taps into that level. After taking our trade idea based off of the Blowoff signature, we can then take profits at opposing liquidity, aiming for at least 2 to 1 R near old highs and old lows. So as we can see here, price then taps into our higher time frame PD array, gives us that Blowoff signature to then take the longs for that continuation higher, and we can say the same for the downside, coming higher, tapping into that higher time frame PD array, giving that Blowoff signature for the continuation of the downside, targeting opposing liquidity. Now let's get into some live market examples and see this in action. We're looking at GBPUSD on the 4-hour time frame, and we can already identify this failure swing. Price came up, failed to take out this high, giving this massive displacement to the downside, leaving this as our last up close candle, which is our bearish order block. Now let's go down to the 1 hour time frame and see if we can get more precise. Now we're down on the 1 hour time frame, and we can already identify this 1 hour order block, which is nested inside of this 4 hour order block. We are coming into a London session here at 2 a.m. So let's go down to the 15-minute time frame and anticipate price to come up into this level and see if we can get our Blowoff signature. Inside of that 1 hour bearish order block here, we do have this 15-minute bearish fair value gap as another level of resistance inside the marketplace. We have that 4 hour order block, 1 hour order block, as well as 15-minute bearish fair value gap. This is a strong rejection level that we can anticipate the marketplace to find a reversal at. We're down on the 15-minute time frame. 2 a.m. is just about to open up. Let's see what happens. We can see here we get that Blowoff signature where we had that initial push to the upside, giving that accumulation candlestick as soon as we tapped into that bearish fair value gap, giving this displacement candlestick lower. I'm going to take my short here as this candlestick closes, anticipating that next candlestick opening to continue to the downside. Stop loss just above that displacement candlestick high, targeting back below these lows. From the stop loss at the highs down below these lows, we're getting about a 1.1 R on this trade. Very solid. Let's see how this one plays out. Price then taps us in, and then immediately goes down into our take profit, just like so. Very quick, very simple. This is a high win rate model, so this is usually how trades would look like. Very little drawdown and straight to the point. So we're looking at GBPJPY here on the 4-hour time frame, and we can identify this bearish fair value gap as we come into the London session. Let's go down to 1-hour time frame and see what's down there. We're down on the 1-hour time frame, and I can immediately spot this bearish order block here on that 1 hour, just above that bearish fair value gap. Not only am I going to mark out this bearish order block as a potential reversal level, but I'm also going to mark out these liquidity pools as levels that the marketplace can find rejection, as well as this bullish order block. So let's see how the market reacts as it comes down into this level during the London session, and see if we can get some type of signature for a continuation to the upside. Let's go down to a 15-minute time frame and see what happens. Now we're down to a 15-minute time frame. We have the levels below us, and let's see how this plays out. Price then comes down, taps into that bullish order block. As you can see here, we get that U-shaped formation where we had that initial displacement lower, these accumulation candlesticks, and then we eventually saw this massive push to the upside, breaking above this displacement candle. So on the close here, I want to put my entry down here, stop loss just below the low right here of that displacement candle higher, targeting back above these highs for a 2-to-1 R. Let's see how this one plays out. Price immediately taps us into our position, and then TP eventually gets hit just like so for a 2-to-1 R. Very little drawdown, very solid. On to our next example. Now we're looking at US 30 here on the 4-hour time frame, and we can identify this long wick inside the marketplace. It's important to note that when we have long wicks inside the marketplace, you want to anchor a Fibonacci from the high to the low, and that 50% is generally a support level where the marketplace could potentially bounce from for a continuation to the upside, as well as we have came lower inside of this 4-hour bullish fair value gap as well, leaving this long rejection wick. So if we can get a push back down into this rejection wick for that continuation to the upside. Let's go down to 1-hour time frame for some more information. We're about to enter London close here, and as you can see here, not much going on apart from this 1-hour long wick, but we already established that 4-hour long wick, so not much on the 1-hour time frame. Let's go down to a 15-minute time frame and see what happens. We're down on the 15-minute time frame here. We do have some liquidity below us, as well as some liquidity above us as well. So we do have that support level down here, which is a 50% here of that 4-hour long wick. I want to see if we can come down into this long wick, potentially give a signature for a continuation to the upside back above these highs. So let's see what happens. Price comes lower, taps into that 50% of that 4-hour long wick, and then we get that blow off signature. So as you can see here, we had that initial push lower, that accumulation candlestick, followed by this displacement candlestick to the upside, breaking above that push lower. So based off of this candle's close, I'm gonna immediately take my longs here. Stop loss just below the displacement candlestick here. You can even put your stop loss down here as well. This is fine, but I prefer a higher risk to reward, reaching back above these highs for over a 4-to-1 R. Let's see how this plays out. Price taps us into our trade, and then we immediately rip higher back above this buy side liquidity for a 4-to-1 R. Very solid. On to our next example. We're looking at gold coming into the London session, and we can already identify that we have taken out this Asia session high, as well as we have been making overall higher prices on gold, and we have inefficiencies like this fair value gap below us that we could potentially see a retracement down into. So I'm going to go down to a 15-minute time frame here and see if I can get some type of blow off signature for a reversal move. We're down on the 15-minute time frame, and we can already identify these lows inside the marketplace, as well as that 1-hour bullish fair value gap as potential draw on liquidity. So I want to see if we can get some type of blow off signature, reaching back down into the low here of this initial push higher for that continuation to the downside. Let's see what happens. As you can see here, we get that blow off signature. We had the initial push higher, taking out this buy side liquidity. We had these two accumulation candlesticks following this displacement candlestick to the downside, breaking below that initial push higher. So I'm going to place my entry here just as the candlestick closes and the new candlestick opens, Stop loss just above the displacement candlestick high, targeting back below this old low as well as 1 hour fair value gap. Let's see how this plays out. Price comes in, taps into our entry. We do have a bearish fair value gap here as well. If you want, you can also scale into your trade. Stop loss still above that displacement candlestick high. So instead of getting a 1-to-1 R, we can get a 2-to-1 R because we're capitalizing on this trade and scaling in. And just like so, price comes down into our take profit. Very solid. That's gonna be it for the video. I hope I gave you guys a lot of value. Make sure you guys go and back test this in your own trading as well as in the live markets. If you see this in action, capitalize on it any way you can, and make sure to shout me out on Instagram at Arkhamtrades when you do. I'm Arkham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me, not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well at Arkhamtrades. Thank you for watching.